Welcome to Analyzing Finance with Nick. In this video, I am going to be comparing taxes in the US and Europe. Is Europe really a high tax place where people simply can't get ahead on earned income? Is the US really a relative tax haven compared to the rest of the developed world? I'm going to analyze that and break down really the differences. On the surface level, it looks like every developed country has about the same level of taxation. If you just look at solely top tax rates, every major country has a top tax rate of about 40 to 50%. As you've seen in the map I'm highlighting right here, the countries that are in the green are countries with income taxes above 40%. And the ones that are below that, such as the US and Canada and Switzerland, are because they don't factor in taxes in a federal system. In a unitary system, basically what tax you pay to the federal government is what you're paying. Whereas in a federal system, such as in the United States and Canada and Switzerland, there are materially additional taxes on top of the federal tax. In the U.S., state taxes are a fraction of federal tax. Top federal tax, 37. In the highest tax blue states, such as California and Hawaii and Oregon, it's about 10% to 13% is the top state tax bracket. So your top combined is about 50%. Canada is similar. Top federal tax rate's about in the high 20s, but the provincial taxes are also in the high 20s. So your top tax rate exceeds 50% in most of the populated provinces in the country. And in Switzerland, their top rate is 12%, but depending on which canton you live in, that's the canton rate is as low as 0 in Zug and as high as 29% in cantons such as Geneva and Zurich. So that's why those look a little bit lower on the chart. But overall, everybody kind of has a similar top marginal tax rate. And that's, I think, effectively due to analysis of things, economic concepts such as the Laffer curve, where above a certain point, when governments try to raise taxes above that 50% level, the loss in revenue from either attempted tax evasion or disincentives to work tend to exceed the additional revenue gained from those taxes. And we've seen this most recently when France tried to increase its top rate to 75% under the presidency of Francois Hollande, and the capital flight to Belgium and other countries as a result of that, and that was quickly reversed. However, this only tells part of the story. Even if all the tax rates on the top are in a similar range, if you look at where those high tax rates kick in and the brackets, it tells a very different story. Like, for example, in the US, the top tax rate hits in at 578,000 USD on the federal level, which is 37%. In California, the top rate hits at $1 million per year at 13.3. So you're not hitting the California resident at the 50% level until you break $1 million a year. And that's just on the marginal tax dollar above that. Then let's compare that to a country in Europe, such as Belgium, which I did a video about recently. The top tax rate in Belgium, and this excludes payroll taxes for Social Security and other additional surcharges for various social programs there. The tax rate kicks in at a little less than 50,000 USD, so for about 46,440 euros, you're paying 50% in taxes. An American, by comparison, at that same level of income, is paying a fraction of that. They're paying about 22% on the federal level. If you live in Florida, you're paying just 22%. California, you're probably paying somewhere between around 30%. And so that's where in Europe and a lot of these other countries, you're killed. One, because the highest tax bracket, and Belgium is just one of many. Like Australia, for example, it's 180,000 AUD, which at current exchange rates is about 120,000 USD. In the UK, top tax bracket is 47% on anything above 125,000 pounds, which at current exchange rates is a little bit more than 150,000 USD. And in that country like Spain, their top tax bracket is 47% at 300,000 euro, but the 45% tax bracket kicks in at just 60,000 euro. So and the same with England. Like, even though the 47% bracket only kicks in at 125,000 pounds, the 42% bracket kicks in at a very low level of 43,000 pounds, which is a little bit less than 60,000 USD. So, like in California, a very high tax state, you're paying 25% at 60,000 USD, or maybe a little bit more in the mid to high 20%. So it's a material difference in just right off the top. And a lot of these numbers don't even include things like payroll insurance or paying for health care, which additional tax for that in many of these countries. Some of it's built in, but it really depends on the country. And other kind of surcharges that governments charge in these countries. The other major difference in the taxation systems of the US and other countries in the developed world is the relatively low tax burden that Americans pay in sales taxes or other consumption taxes. In America, only 18% of its tax revenue is from taxes on goods and services, and mostly that comes in the form of sales taxes on the state level, which range anywhere from 0% in Oregon up to 10% in Illinois and some of the highest sales tax states, with where I live in California at about 8.75%, but it could be higher depending on which municipality you live in. And sales tax is just at the final end consumer point of sale point. It's not like a VAT where most of the world has, which is a value add tax, where you have to pay the VAT not just at the end for the final customer like you do in the US, but it's compounded in every step of the value chain. And so that's why the tax revenue in countries with VATs from goods and services tends to be much higher than America. Like the US, in terms of percentage of its taxes from income tax, is actually higher than the OECD average. It's just the US overall just collects a lot less taxes overall than other countries because they do not have a VAT, and the tax brackets are actually far more progressive in the US than in other countries. In a lot of European countries, in order to pay for these generous welfare states that they promise their people, high taxes start at much lower levels of income. As I mentioned examples in Belgium and Spain and in France and UK, you're paying at very modest middle-class incomes 30 to 40% on taxes, whereas those kind of tax rates don't kick into the US unless you're a very high earner. A lot of these countries don't have the same strength and say of capital gains protections as the US does, and they have a lot of other surcharges. And then the big thing too is the VAT. So it's not because the marginal rate is that much higher in Europe, because outside of Denmark and Belgium, it really is not. The thing that really kills European taxpayers and is the higher tax brackets on the lower end of income and the VAT, which is a tax on consumption. So if you're a super high, ultra high net worth person who's making multi-millions of dollars a year, your tax burden isn't that much different in Europe to America, at least on an income basis. However, the bigger difference is for middle class and upper middle class people are paying much higher tax bills in Europe and the US. And as I talked about in my video about old money and the European hierarchy. This might be partially by design to prevent challenges to old money and to keep everybody kind of around a stable lower middle class level, so the crab in the bucket phenomenon doesn't take down that continent's old money elites. I'm not saying that's the only reason for it. It's also just people just prefer, I guess, social stability over economic potential. And I think that's a common theme in Europe. I talked about this in my video, The European Dream. But I think that's some of the drivers of why this is the case. And we've seen it in the data. If you look at cumulative tax revenue as a share of GDP, it really highlights this. America has some of the lowest tax revenue as a share of GDP at just 26.8%, according to ourworldinData.org. Whereas you compare it to other developed nations, particularly in Europe, it's relatively low. Canada, that's a third of GDP as a tax revenues. In countries like Denmark and France, it's 7 to 48%. Spain, it's 39. Portugal, it's 37. UK, 34. Italy, 43. Developed economies outside the EU are a lot more taxpayer friendly, such as New Zealand at 36.5% and Australia at 30%. Both of those are also tend to be much more favorable to dividend taxes and have their payroll tax built into their general income tax scheme. South Korea is at 29.9 and Japan is at 32.9. They're all modestly higher than the US, but they're still far lower than Canada and Western Europe in terms of tax revenue. Developing countries tend to have lower tax revenue as a percentage of GDP, but that's not because they're pro-business tax havens. It's more in the sense that in developing economies, it's more difficult to collect income tax due to a variety of infrastructure issues, both in their financial system and physically, making it more difficult to do so. So the bottom line is, is taxation really that much worse in Europe? Unless if you are in the very high rungs of society, yes. And even if you are, it tends to disincentivize entrepreneurship for people who are making a bunch of money, but it's good for people who are preserving existing wealth, at least relatively speaking. The U.S., that's part of the reason why America has more economic opportunity, because when you do finally get successful, you can keep a lot more of your money than other places and build up savings, which could be capital for future investment, for future growth, or to pass on something to your next generation, which is a lot harder to do in other parts of the world. So, because even on a modest income, taxes are high. Some people think that's worth the trade-off in exchange for more generous social services. Others want the opportunity. The only real European country that has a similar level of economic freedom on the tax front as the U.S. are either Switzerland or Ireland, but Ireland is kind of, that tax burden being low is mainly due to corporate taxes on multinationals. If you take out that component, it's really only Switzerland that has a similar level of tax freedom that Americans do in the developed world. So let me know what you think. Do you think I am wrong about my perception on this? Do you think that the tax gulf between America and Europe isn't as big? Or do you think the U.S.'s years of deficit spending and losing its status possibly as the policeman of the world will force them to raise their tax burden on its citizens to levels in line with the rest of the OECD? I'd like to hear your comments on these or more in our discussion on this video. And if you like this type of content, feel free to share, like, and subscribe. Thank you for watching.